It started with a buyer message on a marketplace, then turned into a scam that made sellers lose money instead of earning it. The buyer seemed genuine, asking normal questions and agreeing quickly on the price. They offered to pay immediately, often using methods that appeared secure or even safer than usual. Then came a small step, a link, a code, or a payment confirmation that required verification. Sellers followed the process, believing they were receiving money, not sending it. In some cases, they were asked to pay fees, confirm payments, or refund overpayments that never existed. Globally, marketplace scams like this have taken millions from individuals selling everyday items. What looked like a simple sale was actually a system designed to reverse the direction of money. By the early 2020s, scams had become one of the most reported fraud types across platforms like Facebook Marketplace, Gumtree, and online classifieds. These scams were often run by organized groups targeting sellers rather than buyers, reversing the expected flow of transactions. Victims were individuals selling everyday items, electronics, furniture, vehicles, or household goods. The scam typically began within legitimate platforms, using real messaging systems to establish trust. Buyers appeared responsive, polite, and ready to complete the purchase quickly. In Australia, reports to ScamWatch and the OAIC showed consistent losses ranging from small amounts to several $1,000s per case. What made this scam effective was its simplicity. It followed the normal steps of a sale but altered key details. Unlike traditional scams, the seller believed they were about to receive money, not lose it. By the time the interaction progressed, the setup for the scam was already in place. The buyer usually initiated contact with a simple message, asking if the item was still available and showing immediate interest. They often agreed to the listed price without negotiation, creating a sense of convenience and speed. To build trust, they used normal language, sometimes even referencing local pickup or common payment methods. Then, the payment method was introduced, often framed as secure, such as bank transfer, pay ID, or a courier service arrangement. In many cases, the buyer claimed they could not meet in person and needed to complete the transaction remotely. The next step involved sending a link, a screenshot, or instructions to confirm the payment. Because the process resembled real transactions, the request did not appear unusual at first. Some sellers were told they needed to upgrade their account or verify details before receiving funds. By the time the instructions were followed, the seller had already moved into the scam's controlled process. Once the seller followed the instructions, the scam moved into execution, where the direction of money was quietly reversed. Fake payment confirmations were sent, showing that funds had been transferred but were pending verification. Sellers were told that to release the payment, they needed to complete a small step, such as sending a fee or confirming details. In some cases, the buyer claimed they had accidentally overpaid and requested a refund of the excess amount. Because the seller believed the original payment was real, sending money back felt like correcting a simple mistake. Links provided often led to pages that mimicked real banking or payment interfaces, asking for credentials or verification codes. In other situations, instructions guided sellers to send money directly under the belief it would unlock the incoming payment. Investigations later showed that these confirmations and interfaces were entirely fabricated. By the end of this stage, money had already been sent by the seller, even though they believed they were receiving funds. As the interaction continued, scammers reinforced the process by sending additional confirmations, emails, or messages that appeared official. They often introduced explanations such as account limits, verification requirements, or temporary holds that needed to be resolved. Sellers were guided step by step, with each action framed as necessary to complete the transaction. If hesitation appeared, the buyer maintained a calm and cooperative tone, keeping the interaction credible. In some cases, multiple messages or fake support responses were used to simulate a real payment system. Losses increased when sellers were asked to make repeated payments to unlock or release the funds. Reports showed individuals sending several transactions, each one appearing to move the process forward. Behind the scenes, funds were immediately transferred out and layered across accounts. By this stage, the seller believed the payment was still pending, even though the loss had already occurred. The moment of realization usually came when the promised payment never arrived despite multiple completed steps. Sellers checked their bank accounts and found no incoming funds, only the money they had sent out. Attempts to contact the buyer often failed, with messages no longer delivered or responses becoming inconsistent. Some tried to verify the payment confirmation with their bank and discovered it was not genuine. Others noticed that the links or emails used in the process did not match official platforms. Authorities like the OAIC issued repeated warnings about these exact patterns. By the time the situation was confirmed, the transferred funds had already been moved through multiple channels. Recovery attempts were often unsuccessful due to the speed of transactions. What initially appeared to be a straightforward sale quickly unraveled into a system designed to extract money from the seller. The scam was typically uncovered after victims reported the incident to their bank, marketplace platform, or consumer protection agencies. Patterns across reports showed the same structure: fake buyers, payment confirmations, and requests for verification payments. Agencies like the OAIC and international partners identified these as coordinated marketplace fraud operations. Investigations revealed the use of cloned payment pages, spoofed emails, and scripted communication designed to mimic real transactions. Financial tracking showed how funds were quickly transferred through multiple accounts, often involving mule networks. In some cases, the same scam scripts were reused across different platforms and regions, with minor changes. Banks and platforms introduced warnings and verification steps to reduce these incidents. Despite these measures, new variations continued to appear, adapting to different payment methods and systems. What appeared to be individual buyer interactions was ultimately identified as a structured system designed to reverse the direction of money in a sale. What made this scam effective was the way it followed the normal flow of a sale while quietly changing one critical detail. Sellers were not acting unusually. They were completing what appeared to be standard transaction steps. The system removed suspicion early, created confidence through communication, and introduced small actions that led to loss. Because the seller expected to receive money, the idea of sending funds felt temporary and reversible. Investigations showed that the same structure was reused across multiple platforms and item categories. This allowed the scam to scale quickly, while remaining difficult to detect in individual cases. The financial impact often came from multiple small payments rather than a single large transfer. For many victims, the realization came only after communication stopped and funds were gone. The pattern remains active today, evolving with new payment methods but relying on the same core mechanism of reversing trust into loss.